Hello guys, welcome once again to Traders Delight. How have you been and how's been your trading sessions? Hope you have been getting amazing results from all your trading activities. I welcome you especially once again to my channel. If you are new, kindly click the subscribe button and turn on the notification bell so that you are notified whenever I post a new video. We are going to continue today the price action training series, and today is part 3. And in the last video we tried to understand what price action is, and I told us back then that whenever a trader uses past price movement and patterns to predict the future movement and patterns of price, that is called price action. So studying of the price and the movement, and then trying to use that as a basis to make decisions for the future movement of price. That is purely what is called price action. And we talked about the last time some very important things you need to note when using price action. There are some tools that you will need to know. So one of those are chart patterns, understanding chart patterns, understanding candlestick patterns, understanding support and resistance, consolidation, retracement, Fibonacci retracement levels, and things like that. So those are very important things you need to know. So today we are continuing with it, and today is part 3, and I want you to please, like I told you, be open-minded. If you are a price action trader before, there might be one or two things you might learn from this. And if you are new, I congratulate you because you are getting to learn it step by step. So be open-minded so that you can get a lot of benefit for what we are about to talk about today. Today, before we proceed to what I want to teach you today, I want you to understand that when you are using price action, you want to go with the masses. What do I mean? It's a principle of going with the masses. You don't want to go with it's not price action is not a trading you do because you just feel like, let me just pick here, let me just, because there will not be, most times if you are using pure price action, you might not be using indicators, which is why you need to understand why price action really is the way it is. So it is a mass psychology of buyers and sellers. So the best way to trade price action is to go with the masses. Take for example, somebody is taking a trade and is trying to take a trade, and then at a resistant level, the person is placing a very major resistance level which has not been broken recently, and the person is taking a buy. That is not a good decision, because you don't even know what the masses are deciding to do at that particular point, and you are placing a buy because it's a resistance level. Resistance is always it resist upward movement, and support resist downward movement. So support helps to hold downward movement, so a resistance helps to hold upward movement. So, and a resistance level, it shows that there is something strong about it, about the movement, and it's most likely, if not 100%, though most likely going to go back downwards. It's going to be rejected at that point. It's going to reverse at that point. So you don't go to such points and then just place a buy even when you have not seen a confirmation that it has broken, maybe retest, and it's going back upward. So the masses takes the win when it comes to price action. So you want to go with the flow where the most amount of people are going. You don't want where the energy is going. Take say for example, when the water is flowing downstream. When the water is flowing downstream, the entire energy of the water is going downstream. So the best bet is for you to go downstream with the water, and that is where you make the best gain, and then you use less amount. You get that? So take for example, let me just quickly give you an example of this through using this a chart. Just take note of this side, this side. Now let's take for example, this is a 1 minute time frame anyway, but let's just take for example, let's say I want to pick a support and I place a support level here. Now look at this. Now imagine now, but it was going like this, and then this place approaching here, and the person says that is placing a buy. Now placing a buy here means that is saying that this will go forward, and for the price to move like this, price move on mass psychology. This is a mass psychology movement. So because price came here and it met a resistance level, it went back down. You can see price try to break it because some few people think they can pull it upward, but price will eventually go in the direction of the mass people. The masses, the majority of people, that's where price will go, especially in volume now, not just in count. When we have more people with more equity and they are buying, then price will buy. But here, a lot of people have decided to go on a sell. So taking on a buy here is not the right decision to take. You can see you will have had a lot of drawdown. You can see a lot of things here. So you need to understand that your end goal is not to take decision based on what you just want to take, but you take decision based on what you discover in the market, and let the market guide you on the decision you want to take. That is the main reason why price action work for some and it doesn't work for some. Don't be the one to decide. Let the market give you the decision to take. All right. So basically, in addition to what I just said, I just used that is, we have not yet started the whole mapping. Just use that to show you some of the things we're going to explain. But I need to explain the concept of mass psychology as is in trading. Mass, when there is volume, so markets usually go in direction of volume, equity volume. So your most important thing you want to do is to make sure that you are in direction of volume so that you can get the best from the trading activity. All right. And one more thing I want us to understand is that this is a price chart. This is a price chart. This is for volatility 10 index. This is a price chart. And what this entails, this is price as against time. This is a price chart. And what this entails is the movement of price as against time mapped on a chart. This is a chart. Now, this chart can be in three forms. You can use three charts. One, it can be a bar chart. Let me take you there. See, let me zoom in so that you can see what I'm telling you. This is a candlestick. Now it can be a bar chart. You can see that. See, this is a bar chart, and what this entails is this is the open, this is the close. See, this is the open, this is the close, this is the open, this is the close, this is the open, this is the close. So you see, this place is called the high, this place is called the low. So however, so this is a bar chart. If you are used to using bar chart, you can stick to it and use it. This is bar chart. You can put the price chart in this form. Another form you can put the price chart is in candlestick, which was formerly there before. This is candlestick chart. So this is the body of the candlestick. Take for example, let's just use for an example. This is called a wick or shadow. This is also called a wick. This is upper wick, this is lower wick. All right, this place is called the body. This place here is called the open, and this place here is called the close. This is a bullish candle. You can see it is green. And when we take a look at this one now. This is lower wick, this is upper wick, and this is where the candle opened up here and then it closed down here. So this is what they call a bearish candlestick. This is a candlestick chart. So price can be in candlestick It can be in bar chart, it can also be in candlestick. Lastly, it can be in line chart. Now, this is if you remember secondary school mathematics or elementary mathematics or pure mathematics, any math or economics, you realize that most of the time when you plot a chart or a graph, it's always most times you use either bar chart or line chart. So you are used to that. You use line chart. You can see this is a line chart. Let me just can see this is a line chart showing movement of price, and then this is like plotting points and then connecting all the points with a line. Get it? All right. So I want you guys to understand this. So as we go on, I will recommend that you stick to one, and the one I recommend is candlestick chart. The reason why I say candlestick chart is because you are able to get a lot of information from the candlestick chart easily, unlike the other ones. So candlestick chart is what we're going to recommend for this training, and then in the next training, in the next video, we're going to go even deeper to make more explanation as regards what candlestick chart looks like, and then how we can use it to trade price action. I hope you guys have gotten value from today's video. Uh, Smash the like button and subscribe, and also get, if you have not watched the previous two, please watch it so that you can grow in knowledge as we take it step by step. Then we are set to go even big, even deeper next in the next video. All right, guys, see you then. Take care.